might have just confirmed that Bitcoin is headed to 200K in the next 150 days, but it might not be for the reasons we all think. Yes, Jerome Powell just signaled rate cuts are coming this year, actually September and possibly in October. And the last time we saw rate cuts in 2024, Bitcoin pumped by 70% in a matter of weeks. This would signal a Bitcoin rally to about 200K by the end of the year. And there's a couple of reasons that I think this rate cut schedule could be a little different. But before we get into all that, before we get into the speculations, let's get into today's news. So, of course, I'm not alone. I got Nico over here. But since I've become the macro nerd here, the reigning macro nerd, I will be covering today's segment. So here's the headline from CNBC. We were talking about this all week. Jerome Powell just spoke in Jackson Hole. Yesterday, we were kind of comparing the fact that there was a Wyoming blockchain summit also in Wyoming just days before the Jackson Hole speech from Jerome Powell and the Fed meeting in Wyoming as well. And this happened about 2 hours ago, at 10 o'clock Eastern time this morning. We had the Jay Powell speech and the markets are rallying. They are responding to the dovish takes by Jerome Powell, which is extremely bullish for us here as Bitcoiners. Anyways, let's go to the headline. The headline is Powell indicates conditions, quote, may warrant interest rate cuts as Fed proceeds, quote, carefully. Reading the key points, Fed Chair Jerome Powell on Friday gave a tepid indication of possible interest rate cuts ahead, as he noted a high level of uncertainty that is making the job difficult for monetary policymakers. And, quote, with policy in restrictive territory, the baseline outlook and the shifting balance of risk may warrant adjusting our policy stance, he said during his annual address at Jackson Hole, Wyoming. While not addressing White House demands for rate cuts specifically, Powell did note the importance of Fed independence. So they're still beating on the Fed independence meme, but there's been a lot of pressure coming from the Trump administration. We know what the Trump administration wants. They want a weaker dollar and lower interest rates so that we can bring, we can increase the exports in the U.S., bring imports back to the U.S. And of course, lower interest rates essentially means freer money, easier money to flow. So businesses can take out more loans, which for us Bitcoiners essentially means they're going to expand the money supply. There is nothing stopping this. Anyways, there is a couple of quotes here before I kind of break down what the implications are. While Jerome noted that the labor market remains in good shape and the economy has shown resilience, he said downside dangers are rising. At the same time, he said tariffs are causing risks that inflation could rise again, a stagflation scenario that the Fed needs to avoid. With the Fed's benchmark interest rate at a full percentage point below where it was when Powell delivered his keynote a year ago, and the unemployment rate still low, conditions allow for, quote, us to proceed carefully as we consider changes to our policy stance. Quote, nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. That was as close as he came during the speech to endorsing a rate cut that Wall Street widely believes is coming when the Federal Open Market Committee next meets September 16th through to the 17th. And we have Larry Lepard here, dovish, and the evidence is gold's pumping, silver's responding well. Of course, Bitcoin's pumping. I think it pumped like 5K this morning. So things are working in our favor here. Yes, there's been a lot of talk right now. And as I said, it does feel, even though I was feeling a little bearish in the beginning of the week while we were dumping, it does feel like we are in a bear trap scenario. And if this is the case, if we get the rate cuts in September and October, guys, it's going to get an extremely bullish end of the year. Now, we have to remember what
2025.
Yeah, no, 2026, 500K 2026. But we do we do have to kind of remember what Jay Powell's stance is here. He does kind of liken himself as a Paul Volcker type. And for you guys that aren't as familiar with, Fed history, monetary history here, Paul Volcker was the 12th chairman of the Federal Reserve. And in the end of the 70s, kind of beginning of the 80s, he was head of the chair during a period of really high inflation. It was aggressive inflation. I think they were calling it, what were they calling it? The Great Inflation Era. And he was trying and doing his best to not cut rates. He actually raised rates to an incredible high of like 21.5%. So this is what Jay Powell has kind of been looking at himself at. Like what Jay Powell is doing right now, though potentially Trump is saying he's going to fire him, we all know Jay Powell is out next year. And I don't think he's really doing all of this to just vie for another position. I think what he's trying to do, or has been trying to do, is to cement his legacy. Again, he looks at himself as a Volcker type. And Paul Volcker, as much as you may not like what he did, and you may not like the Fed chair or people at the Fed, he was able to minimize the inflation during a time of very high inflation in the U.S. And so Jerome Powell is kind of looking at himself as this type. You know, he is battling Trump. He does know that there is high inflation here. This is unprecedented areas that we are at right now in the 2020s. And he wants to fight the inflation because he knows if he does lower interest rates too bad, it is two indicators. One, we are potentially going into a recession, more like a Great Depression, global depression here. And two, he doesn't want to be the Fed chair that basically capitulated and inflation continues to rise. And so this has been his whole mandate for the last couple of years. He wants to fight inflation. This is why he's probably been holding these interest rates. But another interesting thing did come out of this speech, that Powell said that the Fed has adopted a new framework that removes a reference to the central bank seeking inflation that averages 2% over time, and one to it making decisions on employment based on shortfalls from its maximum level. So it sounds like they are going to abandon that 2% inflation rate, which we've been kind of talking about this as Bitcoiners for a long time. Because they can't get the inflation rate under control, they're just going to normalize a higher inflation rate and be like, this is what's going to keep the economy running. And there's been a lot of speculations that it's probably going to go up to like 4%. That's probably going to be their new mandate. They can no longer hit that 2% inflation rate. So they're going towards, you know, hey, we'll just try to hit 4% inflation rate. And as we know, as Bitcoiners, the true inflation here, the true inflation rate is a lot higher than 2%. I did the numbers this morning, looking at the M2 money supply and, well, the global M2 money supply here. And since 2020, it's expanded by 25%. It went from, I believe, I have the chart here later for you guys. It went from like 76 trillion to about 96 trillion, almost 100 trillion. That's about a 25% increase in the money supply. And when they expand the money supply, that's where the inflation comes from. So even if they're targeting a 4% inflation, that is still way lower than what the true inflation rate is, at least from our perspective as Bitcoiners. It's really probably as high, you could speculate it's as high as 25% the last 5 years. It's not that good. Anyways, you guys don't really care about the macro. I know as
what
Bitcoiners.
Are you talking about?
Well, I'm talking about it from like a macro perspective, or from a Bitcoiner's perspective. The whole goal of a Bitcoiner is we don't have to care about what one guy says to control the monetary policy. But the reason I've personally have kind of been drawn to the macro conversation, it's not so much that all the new influencers coming into Bitcoin are huge in macro and they're getting engagement from it. It's really, since we have politics and the traditional financial system kind of embracing us, or rather landing on our front door, you have to kind of get into the mentality of these big financial advisors. And Wall Street is here. Wall Street's a part of Bitcoin now, and they look at these signals, and this is how they base their trades off of. This is why you'll see Bitcoin kind of react very closely to what's going on with the global or M2 money supply in the US. And you'll also see it when interest rates cut or interest rates are raised, you'll see Bitcoin react. Bitcoin is the most liquid market. And now that we have big capital in the market, they are trading off of these signals. This is why you'll see Bitcoin kind of slump before everything else, or pump before everything else. And I think this is what we're seeing happening right now. Now, again, you're probably here just wondering, what's this going to do to the Bitcoin price? Like, that's cool story. A guy, in charge of the world's money supply, he's getting dovish here. He wants to cut interest rates. He's getting concerned. Well, the interesting correlation here is, again, forgive me, guys, I am pulling up a chart here. Forgive me. Don't throw your tomatoes yet. But I have. So when the last time we cut rates, which was November 2024, we cut it 3 times from November into December. And you can see that when the first time we cut rates, which is, it's not really here on my chart, but it was November 16th, you see the price responded very favorably, a 70% run. Yes, it's not that much. And then we double top. But if the same thing plays out, and this is where it gets interesting, if you don't understand the connection with interest rates and what it does to the economy, how it stimulates growth, this is basically the short of it. Cheaper money means more demand for risk. So when Powell cuts rates, potentially in September, treasury yields fall and then bonds look less attractive. And so investors start moving to riskier assets, chasing higher returns. If the interest rates are bad on treasury yields, which are, the safest return, safest store of value in the market, then they're not really getting any returns here. And as traders, of course, they want their returns. And of course, Bitcoin being outside of the traditional system often sees capital flowing into it when the money is cheap. We've seen this play out in the past. Every time they cut rates, Bitcoin starts pumping. And though we are kind of in a new regime of quantitative tightening, we're not in the quantitative easing. We're not in the free money, easy money era anymore, because there is a lot of things going on in the economy that they can't just have easy money, because that would raise inflation. And of course, Bitcoin as an inflation hedge, that narrative starts to strengthen. And if people are starting to see the problem with their money, with their store of values, that, hey, this inflation is getting out of control, they're going to look for alternatives, guys. And we all know Bitcoin has a 21 million hard cap. All roads lead to Bitcoin. The more they expand the money supply, the more liquidity is in the system, the more they have to find a safe place to park this. And of course, at the same time, gold has historically been kind of the one thing that people hedge, but now Bitcoin is entering the mind share of everyone. And then the second part of this is the interesting stuff. I'm pretty sure, I don't think it was Mark Moss that coined this, but he's the one I've been kind of listening to recently, and he's been coining it the Mar-a-Lago Accords. This is where the stable coins and the dollar milkshake theory, or the Bitcoin dollar theory, all comes into play. Because Trump has been very, very obviously projecting where this is going. Publicly, he's saying, hey, we want a strong dollar. We need US dollar dominance. This is how we're going to make America great. And then privately, and a lot of the legislation they've been pushing through has been based on a few different things. One, they want a weaker dollar, because weaker dollar, as I said, is easier for us to import. And of course, it brings exports back into America. And there's this push for, production to come back onshore in the US. So they want a weaker dollar. And of course, as the dollar weakens, this boost the Bitcoin just narrative in general. Weaker dollar, people need to find something to store their value in. So rate cuts will weaken the dollar. And when Dixie falls, or the dollar index falls, Bitcoin usually rises. And so international demand will increase for Bitcoin, because it becomes cheaper in local currencies, aka their dollars are dying against Bitcoin. And then of course, as more liquidity comes into the system, guys, it's all going to flood into Bitcoin. All roads lead to Bitcoin. Bitcoin is the hardest asset, the most liquid asset. If these currencies around the world, and remember, they're all connected to the dollar, whether directly or indirectly, everything is connected to the dollar. For better or worse, this is how the world works. All global economies, all Western economies, I guess is probably better put, are all essentially pegged to the dollar. Remember the Bretton Woods Agreement, where all the countries came together and they agreed to peg their local currencies on the dollar. And so if the dollar weakens, then that's just a domino effect where all the other currencies get even weaker. And then they start playing hot potato here, or musical chairs, and they all eventually start going into the dollar. Now, the interesting part about this, again, interest rates cut in treasuries, which is what most people use to store their value. So when Powell cuts rates, it's usually bullish for Bitcoin in the medium to long term. Liquidity, goes up, dollar weakens, Bitcoin narrative as an inflation hedge starts to increase. Short term, it probably spikes volatility and potentially inflation as well. So these things are happening all at once. Now, remember what I said in the beginning about what interest rates essentially mean. It means that the returns, again, you can think of interest rates as literally the interest that people have in parking their capital into treasuries. Now, the interesting part about this and the interesting part about the Mar-a-Lago Accords is the idea of stablecoins being injected into the system. They want to essentially, export dollar dominance around the world using stablecoins. They're able to get stablecoins in jurisdictions that otherwise they weren't able to do with the dollar. Now, again, if the bond yields are not attractive for investors, then who's going to buy these treasuries? This is where stablecoins come into the mix. And I think, Nico, we're going to talk about Preston Pysh for stablecoins later in the show. So good little pin to put on that. But essentially, stablecoins are the biggest buyers, one of the biggest buyers in the world right now of treasuries. So all of this is working in symbiotic relationship here. They're going to cut interest rates, or potentially they're cutting interest rates. The free money or loose money, easy money's coming back into the system, or at least into our psyche. More liquidity into the system. More liquidity means inflation's going to rise. They're going to have to park their money somewhere. And of course, that is where Bitcoin comes into the play. Now, I've been ranting apparently for 15 minutes here. I do have some other charts here to kind of explain where we are right now and what happened last night. But I'm going to break it over or pass it over to Nico. Nico, did I break down what's going on with interest rates enough for you to understand how this is going to affect Bitcoin?
Yes and no, but Lynn Alden in the house, and I think her meme sums it up perfectly. In case you missed Powell's speech today, that's okay. He basically said, nothing stops this train. Okay, in all seriousness, let's break down a couple things. This is the concession. The Trump administration has put tremendous amount of pressure on the Federal Reserve. We have multiple congressmen and women calling for criminal charges against the Federal Reserve. You have Senator Cynthia Lummis openly calling for the resignation of Jerome Powell for the Fed not acting as an independent entity. All of that, I believe, was to pressure Powell to eventually lower interest rates so that Trump could push forward his agenda. That's what it was all about. That's this politics that has been playing out, and it seems like Powell has finally conceded. And markets are reflecting that. I think what they wanted to do is that they wanted to run down the clock until the midterms. But what happens if Trump, and with the redistricting going on, which we're not going to talk about on this show, but with the redistricting going on and with a booming economy, that positions the Republican Party and Trump in a very, very good light going into the midterms, right? And I think that the Federal Reserve doesn't like the current Trump administration stance on the Fed, on Bitcoin, and most importantly, on central bank digital currencies, which is the only clear future for central banks. So if you have an openly hostile administration basically saying, hey, you know what, we don't want CBDCs because, we want Bitcoin, we want, the free market money, and your whole institution's future depends on the rollout of these CBDCs, and you had this institutional moat, this protection of this so-called neutrality, wouldn't you use that if your job depended on it? Of course you would. And I think that's what we've seen the last 6 to 8 months. I think we've seen this political maneuvering, this warfare happening behind the scenes, this tug of war between the executive branch and the Federal Reserve. And then there you go. There you have it. 2 days after a Bitcoin blockchain summit in the state of Wyoming, 2 days after you had the federal bank summit of the federal bank summits in Wyoming in the same state. Do you think it's a coincidence that those two symposiums are right next to each other and they use very similar names and the same policymakers are going to one and then the other? Do you think it's a coincidence that Trump has a speech planned 2 or 3 hours after Powell's speech? No, that's not a coincidence. They're sending you a sign. Like I said yesterday, day. This is digital 1776, baby. This is what is happening. And of course, this is extremely bullish for all assets. Every time the Federal Reserve prints money, it inflates the prices of assets, specifically hard assets. And the hardest assets of them all, the soundest asset of them all is, of course, Bitcoin, which is why you saw this crazy pump from $112,000. It seemed like the bull market was over. It seems like we were packing it up. Oh man, we'll be back in 4 years. And then bang, right on that news, we pumped from 112,000 all the way to 117,000. We're consolidating a little bit here at 116,334. But the point remains, you know, this was a tug of war. This was political warfare at the highest levels over the last 8 months. And I think what you saw from Powell today was a concession. That's the first thing I'll say. The second thing that I'll say is the 3% number. That's really interesting to me. Why is it interesting? Because that 2% number, where did it come from? Why does money need to lose 2% of its purchasing power in order for it to function? That's an invention of the central banks themselves. Bitcoin proves that money can function without inflation. Not only does it prove that money can function without inflation, it proves that money can function in a deflationary manner, meaning money actually could increase in purchasing power over time, and money still functions. And it proves that it's better money in the first place. So they're pulling these numbers out of nowhere, right? And I love the Jeff Booth quote, 2% is just enough so that people don't realize they're being stolen from. But they're realizing, dude, there's no effing way we're going to be able to get back to that 2% number, which a lot of people were predicting. So now they're starting to normalize that 3% inflation rate. So yeah, crazy, meeting that was had, that symposium or press conference that Powell had today. I think it's a big win. And let's see if he does lower rates, because he's indicating that he's going to lower rates, but let's see if he does. And again, I think that a lot of this has to do with the tremendous amount of pressure that was put on them by the Trump administration. Opti.
Jerome Powell, if you can hear me, please cut rates. We need easy money. But on the flip side, really, if he does do that and we do see high inflation, it's even more important for everyone out there to explain this to your friends and your family, because the only way out of this is, of course, Bitcoin. Now, Nico, you did say something that kind of connected this to the other story we were covering. I think it was yesterday. No, maybe it's 2 days ago. If they are going to normalize the inflation rates, then as the meme goes, Bitcoin is for enemies. So even the people in the Fed, they're going to need to find an alternative. If they can't make any returns, if there is no store of value, then what are they saving in? If they know what is going on in the plumbing of this, they'd be dumb to save in the dollar. And this is where this story, it was 2 days ago, this story kind of starts to make another appearance here. Remember this headline: Fed Bowman suggests allowing central bank staff to own small amounts of crypto products. It's almost like they are projecting and telegraphing what they want to do. It's like, hey, we're probably going to cut rates. We're probably going to raise our inflation targets. No one wants to hold treasuries. You can't save in the dollar. Yeah, maybe we should allow people to hold Bitcoin, even if they're a part of the Fed. If they don't have any experience with this, maybe they need to hold something. They need to hold this Bitcoin thing so that they can regulate better. Now my tinfoil hat's back on. It's like, no, they know that they're going to freaking nuke the dollar. And so now they're like, yeah, we're going to actually allow our partners to hold Bitcoin. So, that's my tinfoil hat theory for today. But anyways, I do want to kind of look at just kind of the not the historical, but the actual stats here. So I'm over here on CoinGlass. I've really been liking these liquidation maps. So this move here today, where were we when we started today, Nico? Could you pull up those numbers? But it pumped to almost like 117. I know we're like 116-ish.
It was like at 117, yeah.
Okay, and so this was just a move from, $58 million being liquidated in shorts. And then over here, this is where it starts to get interesting for everyone out there. I know we don't trade here, but there is some signals in the market to kind of show us where the next kind of important numbers are, what the next important Bitcoin prices are that these traders are looking at. First one is the Bitcoin exchange liquidation map. You can see, remember last week, I believe there was $6 billion in shorts. Right now, it's barely at $1 billion in shorts, and the big wall is at 117. So if we get past what, about 119-ish, and we start running into 120, then game on. And now here is where it gets really fun. Gorbachev will break down this wall. Where are the walls here? You can see that the big wall here is at roughly 121.5. So there's 1.53K Bitcoin currently on the exchanges at 121.5. So that's probably the number to look at. If we break 125, then the next huge wall is 155. I don't know. That's starting to get me feeling a little more bullish than usual here. I know I was feeling a little bearish on the show on Monday. I kind of tapered and hedged myself and said it feels like a bear trap. I think the bear trap is confirmed now, Nico. It feels like the bear trap is confirmed. So, guys, if we break above 117 and start entering into 121,
why did you
bear
say
trap.
that? You just jinxed the F.
Nah, dude, bear trap confirmed.
Could you pull up the bear trap chart? So that
hold on, I'm renaming this. I'm renaming this. It's no longer the bear chart. It is the Nico trap. So if we can trap Nico here, bullish, super bullish. All right, hold on. My internet's acting up a little bit over here. It's not working. But yeah, I'm pulling it up. I'm pulling it up for you guys. Here we go. 1 second. Let me get this going. Here we are. This one's the Wall Street psychology chart. I'll pull up a bear trap chart so you guys can see it a little better.
We're at the anger phase.
The anger down here? No. I think we're still in disbelief, bro. I don't think we're even in hope yet.
I think we're in disbelief. Yeah.
No, here we go. This is the good one. This is the good one.
Okay, there it is. There it is.
I'll zoom in.
Interesting. Yeah, dude, no, but it makes perfect. It is working. But it makes perfect sense, bro.
I don't know, dude. To the takeoff.
It makes perfect
little
sense, bro.
First sell-off, bear trap.
We haven't had any media attention. Retail does not give a flying F about Bitcoin right now. And that's a fact, right? So,
wait. Our boys over at Rockdom. So we just pumped the amount of inflation we are going to get. Pretty much.
Another kind of like maybe like depressing stat. Jose Rivera in the chat, the last FUD of the week. But another kind of depressing stat is that Bitcoin has barely made all-time highs against gold, right? And it's been like 4 years. This was actually one of the arguments that Peter Schiff used when I interviewed him in Las Vegas. That was one of the things that he said. He's like, look, like, Bitcoin hasn't made all-time highs against gold, and it has made all-time highs against gold, but it hasn't made significant all-time highs against gold. So I agree with you. I agree with Opti 100%. I think could you pull that up, Opti? Yeah, I want to talk about it. I want to talk about it. Because like we are definitely in the bear trap. We're definitely
you want the bear trap one? Okay.
Yeah, we're definitely in the bear trap phase. Like 100%. It just doesn't make sense to be in another part of it, in my opinion. So yeah, like we haven't had media attention. We haven't had enthusiasm. We haven't had greed. Like, we've had the takeoff for sure. We've had a first sell off, I would say was the beginning of the year, right? Tao in the chat, shout out Tao. In the beginning of the year when we went from 109 to 76K, now we've just kind of been chop solidating. I felt a little bit of euphoria, a little bit here and there, but we really haven't had that pump yet. right? So I agree with you, Opti. This might have been the bear trap. This might have been the bear trap.
Dude, bear trap confirmed. Actually, no. Now that the bear is agreeing it's a bear trap, we're in despair.
Yeah, maybe. Anyways, guys, it's going to be an incredible show. We have tons to talk about today. We have a clip from Baltic Honey Badger. I had the pleasure of being able to moderate a panel there. Preston Pysh talking about stablecoin issuers and how they're going to be using that to buy bonds. And then Opti's going to connect the dots there. He was covering that during the intro segment. And then we had some very interesting news. The U.S. House adds a central bank digital currency ban to its 2026 defense policy bill, blocking the Federal Reserve from developing, testing, or issuing any CBDC. And then the big news for today, and we're going to be talking about the significance of it, Bitwise just confirmed it preceded the first ever in-kind Bitcoin ETF redemption. Wall Street settling in Bitcoin. That's right, ladies and gentlemen. Today is a historic day and a very, very good day for Bitcoin. Anyways, before we jump into the show, ladies and gentlemen, I do want to give a very special shout out to our lead sponsor, BitcoinWell.com, the best place to build your automatic self-custody Bitcoin stack. To get started, you go to bitcoinwell.com/simply. You put in your email address. It takes about 2 to 5 minutes to get signed up. The reason that we recommend Bitcoin Well here at Simply Bitcoin, it's an automatic self-custody Bitcoin on-ramp, meaning when you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address. If you're a higher net worth individual looking to buy $50,000 worth of Bitcoin or more, check out Bitcoin Well Infinite. Invest in Bitcoin, preserve your wealth. This is a tailored white glove service designed for family offices, high net worth individuals, trusts, and organizations. To get started, go to bitcoinwell.com/OTC today. All right, everybody, no more delay. Let's jump straight into the numbers segment. We have tons to talk about. We will be right back. I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed and use promo code SIMPLY to get 15% off anything on the stampseed.com store. All right, everybody, we are back. At the time of recording, ladies and gentlemen, we are at $116,480. By the way, scan the QR code on your screen, go to stampseed.com. Don't write down your seed words on paper, stamp them into titanium. You get 15% off if you use promo code SIMPLY. At the time of recording, the Bitcoin price is $116,500. Block height, 911,207. Sats per dollar, 858 sats per dollar. Market cap, 2.32 trillion. Bitcoin versus gold market cap, 9.74%. Decline from all-time high, negative 6.4%. Realized monetary inflation, 0.84%. In the grand scheme of things, we are just getting the party started. Anyways, ladies and gentlemen, at Baltic Honey Badger this year, again, I had the pleasure of being being invited to go. It was a fantastic conference in Latvia, one of the longest running Bitcoin conferences, I believe. Incredible venue, and appreciate the invite, Max and Anna. But anyways, Preston Pysh had some really interesting thoughts about stablecoin issuers and U.S. bonds, and how that will eventually be swept into Bitcoin. And since Opti out of nowhere became this macro expert, I want to get his thoughts on that. So I'm going to play the clip, and then me and Opti will talk about it.
They were tripping over themselves to pass the Genius Act. And you have to ask yourself, why? Why were these politicians tripping over themselves to get this thing passed? And the answer is really simple. They needed a buyer for all their debt. And the buyer is the stablecoin issuers. And it's really kind of interesting to see how that all really transpired and really kind of came to a head. Is, you know, the government had to start issuing shorter and shorter duration paper because there was no buyers for anything that was long duration because there was so much inflation risk. So they're down there like issuing like 1 month money. And it's like, well, who's going to buy all this 1 month money? Well, you know what? The stablecoin issuers literally, like, they love that because they can back everything. They can gobble up all this new issuance. They don't have the inflation risk that if they were buying 30-year paper, they don't want that inflation risk because they don't know if it's going to be fully backed, right? Or they'd have to keep rolling it to try to like manage that. But if it's really short duration, it's actually perfect for them. And then the really smart ones, what are they going to do with all the coupons that they're receiving? They're just going to sweep it into Bitcoin. And then it's really backed because that thing's going up at 40 to 50% annualized. It's like extra over collateralized. What I find so interesting with all of this is you literally have BlackRock and all these other banks that are playing a fractional reserve game. They don't even have what they're issuing in the vault. But yet you have a company that's fully collateralized with extra Bitcoin in the vault, and they're making more profit than the ones that are playing the Ponzi game. And they're getting the issue like literally from thin air, and they're making more money than them. If that doesn't show you like the natural market forces that nature is trying to heal itself, I don't know what does. Because it's miraculous to me that you can have something that's over collateralized just whipping the pants off of the ones that are literally cheating as if it's a total Ponzi scheme.
All right, Opti, what did he just say?
Dude, Preston nailed it. That's exactly what's going on. Look, it's no surprise that the first thing that the Trump administration did in regards to being, quote, the Bitcoin superpower of the world is push through stablecoin legislation. And I think Preston kind of, I think he laid it out pretty simply. It's a very simple idea, guys. As Lynn Alden has been saying for a long time, as Larry Lepard's been saying for a long time, you know, they have two different memes that are basically saying the same thing. Lynn Alden always says, there's nothing that can stop this train. Larry Lepard, or maybe I'm attributing it to Larry and it might be Max Kaiser, but you can't taper a Ponzi. This is what's going on. The whole goal right now from the Trump administration, or Scott Bessent and Donald Trump, and even all of Congress pushing through the Genius Act, is one mandate. And we've heard Bo Hines say this for months now. They want to maintain, quote, U.S. dollar dominance. Now, what is going on right now is the world is waking up to the fact that the U.S. has abused that quote unquote world reserve currency status. And we've exported our debt to, or rather our inflation, our debt to everyone around the world. And as we are currently seeing with this push from the Trump administration towards Jerome Powell, is that nobody wants to buy our debt anymore. The trust in the U.S., in our control over the money, in our stewardship of the money, it's losing that luster now. They do not want to touch our debt right now. This is why Jerome Powell has been trying to keep interest rates high, is because, again, you got to think of interest rates as the interest for people to buy that thing so that they can get returns. And what's happening is, even though the rates are high, no one wants to buy this stuff because they're like, I don't want to own government IOU debt right now. This is why we've seen the push from the BRICS nations to not only start their own stable coins, but potentially talk about leaving the dollar. Now, the interesting part about the stable coins is exactly what Preston said. One of the biggest buyers of treasuries right now is stable coins. Hence, they think they can taper the Ponzi. They think they can stop the fiat debt spiral by issuing a incredible amounts of stablecoin embracement, because if stablecoins do proliferate around the world, two things happen. One, you can get dollars into areas that you weren't able to get before, again exporting our debt to areas that weren't able to be touched before. And then two, you get someone to buy your treasury. So you have two things. You get more people into the system, which we all know how GDP works. It's not just about productivity. It's just having more people, spending money in the system. That's checked off if more people are able to use the dollar through stable coins. Now, the second thing is they need a buyer of stable coins. If no one wants to buy this, how are they going to keep the Ponzi going? They need to dupe more people into buying this debt. And that's where stable coins come in, is the stable coins will buy the treasury, because that's what essentially, they're backed 1-to-1. Well, cash equivalents like treasuries. Now, the interesting part of this is what Preston Pysh said at the end. The smart stablecoin issuers, they're not going to be holding dollars here. They're going to be buying Bitcoin. And this is where their Ponzi unravels here, because yes, like Tether or stablecoins, any stablecoin issuer, they are using treasuries to make a profit off of this, but they're not rolling their profits into dollars or gold or more treasuries. What are they rolling their profits into? It is Bitcoin. This is why that one speech of safety, and I believe it was in Las Vegas when he was talking about stable coins, was very interesting, because he laid it out exactly as we've all been saying. And shouts out to Mark Goodwin. He's been on this for years now, and everyone was making fun of him. And it's happening exactly as he said. They are going to try to use stable coins to continue U.S. dollar dominance. And it's going to potentially extend the runway for the dollar here. So it's not like the dollar is going to go away now if they're embracing stable coins. But the interesting part about this is, these private stable coins, for lack of better terms, and it might sound harsh, are basically counterfeiting and selling US dollars. And then they park the proceeds into more treasuries, and then they invest their income into Bitcoin. And they think they can stop this dollar Ponzi by stable coins, and it's not going to happen. There's no way to stop this, guys. The debt is at such a high level that no amount of stable coins are going to be able to stop this. And even though they're trying, again, they will always have different tools to try to extend the dollar dominance here. And right now they think that their, golden ticket is stable coins, but it's not. They can't taper the Ponzi. So it's very simple. They need someone to buy treasuries. They're looking to stable coins to be that buyer of last resort. They're going to expand dollar dominance or put dollars in areas that it could never be touched before. And then their only flaw in this, and this is where it's, Bitcoin is a Trojan horse, is that these stablecoin issuers like Tether are Bitcoin maxis, and they're putting all of their profits in Bitcoin. Guys, this is the quote unquote Mar-a-Lago Accords. This is what's happening. They're trying to use stable coins to protect the dollar, and it's really only going to speed up their demise here. So look, I'm not a fan of all of this, but now when you see the game a little more clearly, you start to understand why they're pushing for stable coins so much, is because they think stable coins will save them. It's not going to save them. This is not what they think it is. In the end game, though, this will be good for Bitcoin. I mean, Nico, you've been on this for a minute where, look, for better or worse, most people that touch, digital assets first, they do kind of step into stable coins, because it's basically, it's a familiar medium of what they're used to. It's basically one step away from a fiat currency, and then one step away from Bitcoin. And so once more people start to get used to using digital currencies, quote unquote, eventually they will realize, hey, I'm not storing my value very well in this. Yes, maybe stable coins are better if I'm not in the US. Maybe the dollar is better than my local currency. But if you're like us already in the dollar, you're like, why am I going to peg it into something that's losing value? It makes no sense to anyone that really understands the game. But the administration is hoping, Scott Besson's been saying this for a while, they're hoping that the stable coin kind of push will increase their runway here. They think they're going to be able to maintain US dollar dominance for, the next 150, 250 years with stablecoins. They're going to increase their runway, but Bitcoin is going to eventually eat their lunch, because Tether might become, richer than the U.S. government here, and they're Bitcoin maxis. This is the game, guys. This is the Mar-a-Lago Accords. They're trying to export debt to areas that they couldn't before. They're going to use stable coins to do that. Now, the part that's really going to mess them up is, where do the profits go? Where do you park your profits? You don't park your profits in dollars. You don't park it in treasuries again. No one's trying to buy your debt. I don't know if you guys saw, but the Fed just
air horns, please. Air horns, please.
The Fed. Oh, there we go.
Our boy Ben, partner of Simply Bitcoin. Appreciate the super chat, bro. Have a few drinks on me, guys. Love you guys. BTC to the moon. Air horns, Opti. Air horns, please. Bitcoin Ben in the house, guys. Go check out bitcoinben.io. It's incredibly awesome. They have clubs all over the United States. They have resorts in El Salvador. They have the private key bank, the first Bitcoin bank. You guys got to go check it out. So go to bitcoinben.io. Opti, I didn't mean to cut your train of thought.
I forget where. You did. But, I forget where I was.
No, but dude, I mean, listen, like it's interesting, because it's almost as if, what Preston so astutely put is how much they came together on passing this Genius Act, right? Like all the other Bitcoin acts and all that stuff, like that stuff did not, it's being talked about, the Bitcoin bill's being talked about, right? But the Genius Act was like, they just passed it, and it's
the only thing they could agree on, Nico. The only thing they could agree on is pushing the Genius Act through, because they're like, yeah, we got to keep the dollar Ponzi going,
bro.
Let's get this through.
And think about it. Think about the name of the act. They're like, yo, this is genius.
This is genius.
Like, this is genius. This is fantastic. And it's the reality is that Tether, and I love those guys. They're Bitcoiners fundamentally. They are one of the largest treasury buyers in the world. No one else is buying treasuries, right? So
Nico
is buying treasuries, and then not only that,
yeah,
they're literally exporting the dollar worldwide.
Oh, no. I was gonna say, not only are they one of the largest U.S. treasury buyer, but they're also one of the largest Bitcoin treasury companies out there. It's like.
Yeah. Oh, yeah. With 21 and Jack Mallers. Yeah, yeah.
Like I don't think they really thought they made a genius move here. In reality, I think this is just going to
it does
exponentially increase their demise.
It does kick the cow down the road, though.
It totally does.
It does buy them. It does buy them a lot of time. But I would say, like Bitcoiners, for Bitcoiners, like this was inevitable. This was always going to happen. Bitcoin is the better money at the end of the day. A stable coin doesn't fix the inherent problems with fiat money. The inherent problems with fiat money are there two. Number one is they're inflationary. Number two, they get censored, right? So those are the two problems. Bitcoin fixes those two problems. Bitcoin is better money. So naturally, over time, people will go towards better money, right? As this message spreads, as Bitcoin adoption spreads. And I think, and I'm calling this, I'm not the only one to say this, Samson Mao has said this before too, I think stablecoins are a Trojan horse because they get people exposure to digital wallets, right? You get, instead of going to opening a bank account, which it's archaic, it takes like an hour and a half, they ask you every question from Kingdom Come, you download a wallet, and all of a sudden you can use dollars, right? Like it's very simple. That's why they've been so popular in the developing world, in the global south. They've been so popular because people are just like, do you understand that the dollar has one of the best brands in the world? Like you hand $100 bill to anyone around the world that's not in the United States, like in Africa and South America, and it's like holding gold in your hand. Like they look at it as gold. Right. But eventually all roads lead to Bitcoin. Anyways, guys, it's going to be an incredible show. We still have tons to talk about. Historic day in Bitcoin's history. The first in-kind redemption happened, and we're going to be talking about that. We're going to be talking about the significance of that. And of course, it is Friday, so I'm sure Opti has a Friday special loaded up for you guys. We're going to be
kind of
right
bearish,
back.
I'm not gonna lie.
We might not do the culture today. We're gonna be right back. We're gonna be right back in. We're gonna be right back. Hit the news and we'll talk about it. Let's check it out.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
All right, everybody, we are back. So first things that I want to cover is this news. Shout out Bitcoin News. Says the U.S. House adds a central bank digital currency ban to its 2026 defense policy bill, blocking the Federal Reserve from developing, testing, or issuing any central bank digital currency. This is in stark contrast to what Europe is doing. Europe is going down the path of central bank digital currencies. The United States is not. But this is why the midterms are so important. Guys, vote for pro-Bitcoin, anti-CBDC candidates. And the way that it stands now is it seems like the Republican Party has embraced a pro-Bitcoin, anti-CBDC stance, and the Democratic Party, I don't think it's monolithic. I do not believe so, because there's a lot of Democrats that are pro-Bitcoin. There's a lot of Democrats that are pro-Bitcoin, and I'm sure that there's Democrats that are anti-Bitcoin. But when it comes to their voting record, there was a bill, that was multiple bills actually, that were introduced in the House that would forbid the federal government from launching a CBDC, and both bills went along party lines. So most Republicans voted for against the federal government being able to launch a CBDC, and basically every single Democrat voted for the federal government being able to launch a CBDC. So once we get closer to the midterms, again, we're not picking the right or the left or the red party or the blue party. We're picking Bitcoin over party. We should support candidates and politicians as we transition away from money being political that support Bitcoin and that are anti-CBDC. Fiat is evil. You don't want a future for your children. You don't want a fiat. You don't want a fiat future for your children. Do you want the continuation of endless wars? Do you want the continuation of their savings, of their work being debased? Like, no. Like, now they're even trying to justify it. It's no longer 2%. Now it's a 3% inflation rate. So let me translate that to you. The money in your bank, the official policy is it will steal 3% of its purchasing. It will steal 3% of your purchasing power on a yearly basis. On top of which, I'm not going to get into that, income tax, property tax, sales tax, inheritance tax. Like, so you get taxed when you earn income. When you spend that said income, you get taxed again in sales tax. When you buy a property and you sell that property, right? You get there is a specific clause where there's not a tax consequence to it. But let's say you're buying property and selling property to make a profit, you get taxed for that. Let's say you make money in the stock market or you make money in Bitcoin, you get taxed for that. So like let's say you're very wealthy and you want to pass some of that wealth to your children, you get taxed for that. Let's say you want to give up your citizenship and you want to move to a more favorable tax jurisdiction, you get taxed for that, right? Okay, all of those things have been agreed upon legally, whether we like it or not. They're laws. They're laws. They've just been passed. They're laws. I don't remember ever agreeing to paying the money tax. That has not been agreed upon. It has not been agreed upon. And they get away with it. And this is how they're able to spend more money than they collect in tax revenue. It is straight up theft. So, what is the protest against this? The protest against this is buying Bitcoin, earning Bitcoin, putting it into self-custody, opting out of the fiat system, and watch your life improve. Watch your life improve. Everything gets cheaper when you live on a Bitcoin standard. Your purchasing power increases over time rather than decreasing. Anyways, that's the first bit of news. The second big piece of news for today is Pete Ruzzo breaking. Bitwise just confirmed it preceded the first ever in-kind Bitcoin ETF redemption. Wall Street settling in BTC. It is happening. Here is the president of Bitwise with the official announcement. Bitwise processed an in-kind creation order this week. To our knowledge, one of the first in history. This is the newly allowed capability where an authorized participant exchanges the spot asset Bitcoin for ETF shares rather than paying with cash. I don't know why you would want to do that, but okay. In-kind creations and redemptions in Bitcoin ETFs unlock the potential for lower transaction costs, tighter spreads, and cheaper all-in fees for ETF investors. As ever, we're thrilled to continue doing our part to push the space forward, thrilled about this milestone. So I think it is a big milestone. So anyways, the reason why it's huge is that normally ETFs create shares with cash. An authorized participant wires the dollars, the fund goes out and buys Bitcoin and then issues ETF shares. With in-kind creation, the AP, the authorized participant, can hand over actual Bitcoin directly and get ETF shares back. Why does this matter? It cuts out extra steps, lowers transaction costs, tightens spreads, and means cheaper all-in fees for investors. It also makes Bitcoin ETFs work more like gold ETFs, which is a sign of maturity in the space. The bottom line is this. This is another step in integrating Bitcoin directly into traditional markets, making it cheaper, faster, and more efficient for everyone. Now, what I want to see, though, is in-kind redemptions back. Like, what if you want to sell an ETF and you want Bitcoin back? Or does it just work one way, right? That's what I want to see. That's the next development. But anyways, historic day for Bitcoin. Opti, what's your take?
Yeah, obviously a historic day. This is an obvious improvement from where we were. And like you said, it is going to be interesting how this plays out. So shouts out to Bitwise. Now, there was a good question in the chat, and I don't think we've seen anything in regards to this because there wasn't really much clarity on it. But is in-kind creation taxed as selling Bitcoin, which is very interesting if it's a rules for thee but not for me type scenario. But again, I think the point here for kind of everyone here, look, first of all, I wouldn't be buying ETFs. I'm not here for, quote, Bitcoin exposure. You want to hold the thing itself. Like, why are you? And I mean, I know why, but I'm being hyperbolic here. Like, why would you want to have a person hold this for you when you can hold it yourself? Now, I know why people do this, because it's hard to get some of your capital out of the traditional financial system into Bitcoin. But with that being said, with my caveat being said, this is a very good thing if everyone follows and does this. And that means all the, quote unquote Bitcoin that they own, they got to actually buy that Bitcoin. So if more people come in and want Bitcoin ETFs over just the Bitcoin thing itself, maybe this is the volume coming up on the Bitcoin price chart. Because I don't know if you guys have been looking, but volume has been dead like for years here. Like, no one's buying Bitcoin right now. And there has been a lot of speculation of, is it because people are buying Bitcoin ETFs? Like, is it the paper Bitcoin summer going on right now? Because the volume has absolutely disappeared here. And remember the articles that we covered, I believe it was last year. I forget what time last year, but it was headlined something like all the Bitcoin tourists have gone home. Guys, there's no tourists here. The only people that are in the market right now are Bitcoiners that have been here for a while. We're the only ones buying this stuff right now. Besides the corporate treasuries that are making these moves to acquire Bitcoin, no one here. It's a freaking desert. Like, there's no liquidity right now, there's no volume right now, because we haven't kind of caught on to that mania phase yet. But if the price does start running again, I think the mania is going to come back. And of course, that means, hey, maybe we go higher than 200K. But yes, this is a huge historical milestone here for, it depends. I'm sure a lot of Bitcoiners are like, whatever, dude, who cares about ETFs? But this is a historical milestone in regards to the financialization of Bitcoin. And really, it's a stamp. And hopefully all the others follow suit on this. And then this is going to be huge for Bitcoin. I mean, they don't even have in-kind redemptions for gold, right? So this is great. It looks like with the same thing that's going on with the Genius Act of them pushing stablecoins through, we're seeing this happen with Bitcoin, which really kind of leads credence to the idea of Bitcoin as a superior technology is being adopted at a rate that's faster than any other technology we've ever seen in the world. And you know what that means, boys and girls? Number go up. We pamp.
Can you play the rocket ship?
Yes.
Rocket ship, get on board. So
but Roxham, why am I reading this wrong?
In-kind revenue, who cares? I need in-kind tax-free. That's
bars.
Ladies and gentlemen, we're making baby
bars.
Baby steps. I do want to give a shout out to live stream. We just broke 3,000 live viewers across YouTube and X, and of course, Rumble is popping off. We're about to break 10,000 subscribers on Rumble, baby. So
actually, everyone that watches us on YouTube, make sure you're also subscribed on Rumble, even if you're just watching on YouTube. Let's get those numbers up.
We love all platforms. We love YouTube. We love Rumble. We love X. But subscribe. Help support the show. Help us spread the Bitcoin gospel, the message of Satoshi. Help us spread the message that money can exist without inflation, that you have the right as a human being to adopt a money that allows you to keep your dignity, allows you to hope and save for the future, baby. All right, everybody, we're going to hit the culture segment, and we're going to be giving away some free Satoshis. We're going to be giving away Bitcoin by our friends over at Bitcoin Well. So you guys are going to want to stay tuned for the culture segment. We'll be right back in just a bit.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at HIVEdigitaltech.com. I want to give a shout out to our partner, BitcoinBend.io. If you're into freedom, Bitcoin and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
All right,
Okay,
everybody.
guys.
We are back.
you
I
going?
just want to do a quick update on the poll. We asked you guys 40 minutes ago, almost 500 of you guys voted. I asked, will Bitcoin hit $200,000 by the end of the year? 65% of you guys said yes. 35% of you guys said no. I'm ending the poll right there. And then, guys, stay tuned to the end of the show because we will be giving away some precious Satoshis, aka Bitcoin Opti.
I'm going to do a reverse Pareto principle on this, and the 20% that said no are being banned as we speak. No, I'm
That's
trolling.
a joke.
Trolling. Yeah, that was a troll. That was a bad joke. That was a Nico dad joke. Anyways, I saw Marty post this, and there's some.
So I'm taking over for Opti because, he's making fun of my jokes, and it's not cool. So
You could take over, but you ain't got the skills I do, so you can't cover this segment. So it's all good. All right. Anyways, I saw Marty post this morning while I was looking for the show, and then it reminded me of something I've been trying to cover all week. Some great posts by Balaji, and it really makes you wonder. As I said earlier, it is kind of bearish by nature, but it is just a very interesting kind of like historical perspective of where we are right now. Anyways, Marty tweeted this morning. While everyone and their mother is focused on Jackson Hole in anticipation of the Fed Reserve Chairman Jay Powell's speech, I'd like to draw your attention to the fact that leverage in the system is right below historic highs. So as much as we are as much as I try not to be a dollar doomer, there is a lot of things going on that are correlations to what we've seen happen in the past when very bad things have happened. And so, again, you guys can go find this. Go to TFTC. Love Marty Bent. I just want to kind of point out a few of the charts and a couple of the quotes from this, but you can see this first one here for the audio listeners. Margin debt surges to 1.02 trillion in July after surpassing 1 trillion for the first time in June. And quote, the financial system is more levered than it has ever been. At the same time, the pressure on Jay Powell and the Fed to lower interest rates and inflation is starting to rear its head again. This is where we are right now. And then here we got the FINRA margin debt, S&P 500 real values. And as you can see, margin debt is at all-time highs. And it's, that's probably why S&P 500 is pumping because of debt. Anyways, the question lingering in my mind, Marty says, is whether or not we see a melt up in financial assets and leverage alongside with it, or will gravity come into play at some point in the short and medium term and force a material correction? That's the question we're all wondering. Again, another great chart here, which really should probably terrify you if you're not a Bitcoiner. But you have U.S. stock valuations hitting new all-time high. And just look at these dates here. Very interesting dates. First one, 1929. We all know what's happened around there. 1965, 1999. And then now, new high as of August 2025. Probably, not a good indicator of health in the system. Anyways, regardless of what ultimately happens, this is, of course, fundamentally bullish for Bitcoin in the medium and long term. If we get a melt up scenario, of course, Bitcoin pumps. If we get a, gravity comes into play, as Marty was saying, then Bitcoin will likely correct. And then people will be, as he said, starkly reminded of the insanity of the incumbent financial and monetary system yet again. And a new wave of Bitcoin adopters will enter the market. So that's just kind of showing where we are right now, just anchoring us into the present moment. But I saw this tweet. It came across my timeline this week. It was actually posted August 11th. And it really starts to paint kind of a terrifying picture here. Like it does. Anyways, Balaji tweets, the Soviets went nuts on money printing in the years before the collapse. You can see here 1965. Again, that was one of those dates that was part of that chart. And then, it kind of dips around 75 and then it pumps around the 80s. And then it starts kind of pumping in the 80s, beginning of the 80s. And then it corrects, 84. And then it goes inflationary here. It just absolutely nukes in a matter of 5 years. Now, the interesting part here is this quote. And as you can see here, this sounds eerily familiar. So, quote, it took some time for the official numbers to catch up with reality. The regime's official numbers had long understated even the moderate levels of price inflation in earlier periods. But after the mid-'80s, the gap between official inflation and estimated real inflation grew considerably. Efronov summarizes the divergence, noting that in 1988, official inflation was 0.6%, but 6% in the real marketplace. By 1989, official inflation was 2%, but it was really 8%. In 1990, it was 5.3%, but really it was 20%. And then the wheels started to really come off in 1991 with 96.3% official inflation that was really 200% inflation. The Soviet Union collapsed shortly thereafter, and the new regime did not issue falsified inflation numbers anymore. Instead, the real inflation rate in 1992 was estimated to be more than 2,300%. Hyperinflation continued for 3 more years until the old Soviet ruble finally ceased to exist. Again, history doesn't repeat, but it rhymes. Now, I'm not saying we are in that exact scenario currently in the US, but if you look at this chart here, again, let's take a good look. Picture this chart here. It's kind of going up and then it start going crazy. It's going to come down and then it's going to go nuclear. Well, here's the US M2 money supply. It's going up in a very similar fashion here. I would say we're at like 1982 levels, potentially. Of course, I'm speculating here. Maybe they can get it under control. And I'm not saying we are going to hyperinflate anytime soon, per se.
Nothing stops this train.
I agree. Now, on that front, this is the other kind of chart that really shows nothing stops this train. Here's the global M2 money supply. That is going nuclear here. And again, look at these dates. I was checking this out this morning. Right before the great financial crisis, we had about $30 trillion in debt. In 2009, when, it kind of like it abated, things were getting kind of back to normal, we were at $36 trillion in global debt. And then again, here in 2020, we were at about 67 trillion before they printed a whole bunch of money, ended somewhere around 70 trillion-ish dollars. And now, since then, this is what I was saying earlier. Look, $70 trillion by end of 2020. Today, we are almost at $100 trillion in global M2 money supply. The money supply is expanded by 25% globally in 5 years. They target 2%. It's not 2%. I'm not saying we are going to see hyperinflation in the US. All I'm saying is that it seems like the global money supply is expanding globally. So the next crisis here is not going to just be in the US. This is going to be a global thing because everyone has the same problem. And if you're not in Bitcoin, what happened in the Soviet USSR might happen globally. There's nowhere to run. The only place to run is Bitcoin. Again, kind of a doomer end to the show, but history does give us some clues of what is going to come down the pipeline. And I saw this tweet by Balaji, and I'm like, damn, that breakdown, that summary sounds exactly what we're seeing right now. Again, you know, Jay Powell. And I, when I first thought about bringing this up, we didn't even get Jerome Powell admitting that they're going to change the inflation target rate. And then we get that news. It sounds very, very similar to what happened at the end of the USSR. So you guys need some Bitcoin. You need to make sure you get more of your friends and family saving in Bitcoin. This is the only way out of this, guys. The only way out of this debt spiral doom loop is for more people to hold Bitcoin and more people to use Bitcoin and save and store their Bitcoin in cold storage. Do not buy ETFs. Do not buy the Bitcoin treasury stonks. Buy Bitcoin, take it into self-custody. It's the only way that you will be able to survive whatever financial crises is potentially going to happen. We all know boom and bust cycles, they happen pretty cyclically. It's Friday.
It's Friday, but it's been an incredible week. It's Friday, but it's been an incredible week. And the reason we're gonna end off the week very, very nicely, ladies and gentlemen, because what a better way. You can't end the week in a better way than giving away some sats. And that's exactly what we're going to do. And we're going to do it with our boys over at the best place by far to build your automatic self-custody Bitcoin stack, BitcoinWell.com. So every time you buy Bitcoin on BitcoinWell, ladies and gentlemen, you earn something called BitcoinWell points, and you can use those points towards a bunch of different prizes. You could also use those points towards the Bitcoin Wishing Well contest, which we're going to be doing live for you guys right now on air. And every single time you toss a coin into the Wishing Well, you win some Satoshis. And you have an opportunity to win up to 1 million Satoshis every single toss. So let's see what today's prize is. Get your Lightning wallets ready. And today's prize is 549 sats. If you go to bitcoinwell.com/simply, again, bitcoinwell.com/simply, when you sign up to BitcoinWell, you get 3 tosses into the Wishing Well. Every single toss, you have an opportunity to win up to 1 million Satoshis, which is north of $1,000 these days. Absolutely crazy. Anyways, I'm going to end today's show on that note, giving away some sats to the viewers and the listeners. Guys, we love you all. Thank you guys so much from the bottom of our heart for tuning in this week. This week was a major milestone for Simply Bitcoin. We broke 100,000 subscribers on YouTube. It's been a hell of a journey with my brother from another mother here, Opti, and of course the whole Simply Bitcoin crew.
How to do that feeling?
And we love you guys. Appreciate it. Go outside, touch some grass, enjoy the weekend. Smash the like. Consider subscribing if you feel like we provided you value. And we'll be back on Monday for a brand new episode of Simply Bitcoin.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.